Hello to everyone. You are watching Startup Booster, an online guide that will help you to create and develop a successful startup. This video course was created by a global platform for startups and investors, InnMind.com. InnMind connects professionals in the sphere of innovations, helps startups to grow and develop their business, to find investors, to find mentors and experts, and provides with instruments and resources for growth. And InnMind as well supports investors with expertise and due diligence. I'm Katerina, co-founder of InnMind.com, and today we have as our guest Frederic Joye, tech investor, co-founder of Arcanis Labs. Hello, Fred.
Hi, Katerina. How are you?
I'm great. And how are you?
I'm good, thanks.
So we are going to speak today about the investment process, investment into startup, and the criteria how investors actually choose the project to invest in. So Frederic, could you please tell us where and how you as an investor do you seek for startups? Where do you search for them?
Yeah, so I would say most of the time we receive requests through LinkedIn. We receive about 5 to 10 requests every week from startups that find my profile or Alan, my co-founder's profile. Another way to find startups is through online platforms, just like InnMind or others that showcase different startups that are looking to raise funds. Another one for us specifically is some of our clients when they are in the fundraising process. We might as well, when they want to fundraise, they tell us, and then we decide whether we would like to invest with them or not. And another one is we participate in different incubator accelerator programs as mentors, and we help startups with their technical teams management, and when it comes to software development, and so we also find a lot of startups there, either that become clients or that we actually invest in down the road.
So, and how do you choose startups? What kind of criteria you're looking at? What kind of criteria do you have? What kind of things you're looking at when you choose the project to invest in?
Yeah, so we don't use any, I would say, sophisticated tools. It's mostly the way we assess startups is we have a set of questions that we want to know about the startups, obviously, which is like, okay, who's part of the team? What is their business all about? What is the business model? What they've achieved so far? Can they show traction? What is the roadmap for their development? Of course, some numbers about the financial. Are they pre-revenue? Are they already having some revenue? And then for us, as we provide cash and software development services, we want to understand technically where they stand, what is the technologies they use, what is the team composed of, what is the roadmap also for the product in terms of development. And so we also try to understand how we can really make a difference in that startup.
And what are
I guess we have a little technical problem here. Katerina?
Should I repeat the question?
I think. Yeah, I lost you for about 30 seconds.
Okay, so I will repeat the question. What is the key success factor, let's say, from the point of view of a startup? For them, is it important to have already a well-developed product or service technology, or it's better to have a great team, I don't know, experienced entrepreneurs? like how or what exactly you're like you just told me what you're looking at, but what are the factors that would play the major role in your decision?
I think I would say there are mainly, mainly two or three factors. The first one is of course the team. Who's behind the startup? If it's a solo founder, it's always a bit more risky than if it's like two or three people. And also, how much time do they dedicate to this venture? And I think the second thing is, even though they don't have a specific super well developed product, or they don't have their software yet, is it were they able to show some traction with their idea? So it can be a prototype, it can be like even sometimes you don't even need a software to start selling stuff and seeing what the market wants from there. So I think we also want to see some figures about what they've done and what they've achieved in this traction from users. And I think one other thing is, since most of them are raising, they're looking for money, is like how much have they invested from their own money in the business? So how much do they believe in their idea? And I think it's very important to see that they also believe in their own success to actually make a decision.
In terms of the project startup evaluation, what kind of methods are you using to assess a startup?
Yeah, we don't have specific, I would say, tools. We really look at like the numbers, again, what they've achieved, what is the market potential, and how do they convey their ideas. Because we're coming at such an early stage, it's very difficult to have these companies fit in a model. And I think we also have the light of our experience to say, okay, we think they're going in the right direction and they have the potential to do something big. But we don't have like specific methods that are like you can find in the books.
Mm-hmm. And like, for example, a startup without any revenue comes to you as an investor, and how do you decide what is the valuation, or what is the evaluation of the project? Or do you address to some external analysts, or you do it internally? How do you organize this kind of work?
So until now we've done almost everything internally. And we've evaluated this on the figures they have provided and the knowledge we have about the market they're in. So sometimes, of course, we would ask advice to a few people, but again, in a pre-revenue company, it's pretty difficult to give a valuation. So most of the time, it's like around $1 million. That's the starting point. So sometimes it can be less, sometimes it can be a bit more, but basically, like, I think everyone agrees more or less around this valuation.
Okay, yeah. So it's quite an average for the beginning for the startups, as you mentioned, pre-revenue. And would you share with us, from your experience, what are the 3 most common mistakes the startups make when they come to you, when they in general look for the investor, when they present their pitch? Probably, like, what are the mistakes that they're making?
I think the first one is they do fundraising too early, when they don't have enough to show, and then so it's discounting their value, but it's also not showing what they're capable of actually executing. So I think one of the bigger problem is like they're not able to show how they can actually execute their things. So that's one thing. The other thing is that we see most often in the pitches and in the financial projections is like they have crazy numbers. It's like what year 1 or 2 we do a little bit of revenue, and then year 3, 4, 5, after 5 years they had like $3 billion of projected revenue, and and we know that not everyone's like Airbnb or Uber or and so there's a real disconnect between like what is really feasible and um, what's just a dream. And then some startups that we've seen are also really very capable at not giving, I mean, the accurate figures and the accurate picture of the business. And so that's where we have a set of initial questions, but then we dig in really deep to look at all the inconsistency and to see what people would say about when you challenge their their projections or even their business model. And this is when we see actually, okay, do they really know what they're talking about or not?
So, for example, for a startup on the very early stage, or for a startup that does not have that much of the traction, they should look for other types of the fundraising, other types of the investment, but not going to the let's say external investors, to the business angels or
yeah. Yeah, I think it's mostly they should get a little bit of money from friends and family and put a little bit of their own money. And usually it doesn't need to be a lot of money. It doesn't need to be so much money to validate an idea. So sometimes 20,000 is enough, and then it creates a lot more value rather than going and try to get 200,000 with nothing achieved. So if you're lucky, maybe you get it. But I think it's also like it's not the most efficient way to spend your time.
In general, about startups and about the fields, what do you see? Which kind of trends you can point out probably in Asian market or in American or in European? What kind of industries are the most common, the most popular for the startups to be developed in?
So I think there's what the hype is about and where the real usefulness is. And so a lot of people are talking about fintech and all these cryptocurrencies and stuff like that. And it seems like that most of these cryptocurrencies businesses or blockchain stuff are kind of like, I've read somewhere that 90% is a bit of bullshit. So what I think is good for a startup is like, where do you see that there is a huge opportunity in a market that is not overcrowded? And then, for example, we see that there's a lot of potential in the Internet of Things with devices for farming, for example, or things that would in some B2B niches or in sports. We've invested recently in a startup that does IoT in sports. So there's like devices communicating with a software to give analytics to teams and things like that. So, and it's a professional software for like, it's a business software for managing teams. So I think it's in there. It's in where the niches are in the business. Because if you look at all these, I would say, mainstream applications such as social medias and then transportation, dating applications, it's such a competitive space now, and it requires so much investment that I mean that's not where we would go now. And so yeah. So I don't know where it will go, but we can see that there are other niches where there's still a lot of potential.
And that's very interesting point about because we also see a big trend towards fintech. And another question is, do you see big difference between those trendy and those popular industries in Asia and in Europe, for example, or more or less the trend seems to be similar?
I think the words used to define the types of projects is the same. So like, let's talk about fintech, like, or now like, let's say everyone is talking about fintech for a year or two now. And so yeah, everyone's kind of looking at fintech in the Philippines for us, or in Asia, fintech, in Switzerland, fintech. but the problems these fintechs are trying to solve is different. So the market for fintech in Switzerland is maybe more towards banks and bringing other tools to existing banks, or of course to like maybe lower the bar for wealth management. So that's for richer countries. Now, in the you could see in developing markets, there are companies. One that we're working with is trying to solve the problem on how to help merchants use credit cards and sell more things and manage a little bit their finances, manage their cash flow, because these it's micropayments, right? So like in Switzerland, it's like big stuff, big money, and then in these countries, like bringing technology to like we call this sari store in the Philippines, like those still stores that don't have credit card processing stuff yet, or some don't even have electricity, so they would just do things on a smartphone.
Okay, so exactly, they're trying to find the technologies for that can be used first of all in their domestic market and then already expand it. All right, thank you, Fred, so much for our interview today. It was really very useful to listen, to hear from you as an investor about the criteria, about the investment process, and we are inviting all the startups to listen to our other episodes where we cover different topics about startup development, about investment, about technology development, and others. So thank you all for watching us today, and see you in the next episode. Thank you, Fred.
Thank you. Goodbye.